Michael Burry is one of the most intriguing figures in the world of finance, not just for his remarkable predictions, but also for his unconventional approach to investing and the personal challenges he has overcome. His life, full of triumphs and tribulations, is a study in perseverance, foresight, and the courage to stand alone against the crowd. Let's take a deeper look at his biography, his journey through life, and his investment philosophies. Early life and unusual beginnings. Michael Burry was born on June 19, 1971, in San Jose, California. His early life was marked by a personal struggle that would later become a defining aspect of his character. At the age of 2, Burry lost his left eye to retinoblastoma, a rare form of cancer, and has worn a prosthetic eye ever since. This early adversity set him apart, not just physically but emotionally, teaching him the value of resilience and inner strength. While it made him different, it also helped him focus intensely on whatever caught his interest, a skill that would prove invaluable later in his life. Initially, Burry's interests were not in finance but in medicine. He attended Vanderbilt University School of Medicine, where he earned his MD, followed by a residency at Stanford University Medical Center. His career trajectory seemed set. He was on his way to becoming a successful doctor. But as fate would have it, Burry had another passion lurking in the background: the stock market. The shift to finance, from doctor to investor. Though he was practicing medicine, Burry spent his free time analyzing stocks. His interest in the stock market began to consume him. What started as a hobby, studying company financials and writing about investment strategies on online forums, quickly turned into a full-blown obsession. Burry would analyze stocks late at night after long hospital shifts, offering his thoughts and predictions in online forums such as Silicon Investor and The Motley Fool. His posts gained a small but loyal following due to their depth of analysis and contrarian approach. His methodology was meticulous, and he quickly became known for identifying undervalued stocks. Despite having no formal financial training, Burry's data-driven, independent approach caught the attention of savvy investors. His posts were noticed by none other than Joel Greenblatt, a legendary value investor. Soon enough, investors were lining up to put their money into Burry's hands. In 2000, Burry left medicine and founded Cyan Capital, a hedge fund based in Cupertino, California. Cyan Capital, the early years. Cyan Capital was the first platform where Burry could implement his unique investing approach. He used value investing principles, famously advocated by Benjamin Graham, to uncover stocks that were undervalued by the broader market. But unlike traditional value investors, Burry took his analysis a step further, diving deep into financial statements, SEC filings, and industry trends to find opportunities others had missed. In the early years, Cyan Capital was highly successful. Burry delivered stellar returns, outperforming the broader market consistently by picking undervalued stocks. His ability to combine fundamental analysis with a contrarian mindset made him a rising star in the investing world. Investors who initially doubted him were now praising his acumen, and his fund grew steadily. The subprime bet, predicting the financial crisis. Burry's most famous and successful bet came in the mid-2000s, when he foresaw the collapse of the U.S. housing market. In the early 2000s, while most financial institutions were basking in the housing boom, Burry noticed something disturbing. Subprime mortgages, or loans given to borrowers with poor credit histories, were being packaged into mortgage-backed securities and sold to investors as safe investments. Through his analysis, Burry realized that many of these subprime loans were on the verge of default, and when they did, the entire housing market, and by extension the global economy, would face a massive crisis. Burry's insight led him to an unprecedented move. He decided to short, or bet against, the U.S. housing market. To do this, he bought credit default swaps on subprime mortgage bonds, a complex financial product that would pay off if the bonds failed. His bet was highly contrarian and deeply unpopular at the time, and even his own investors were skeptical. Many tried to pull their money out of Cyan Capital, not understanding the brilliance behind Burry's thinking. Burry faced intense pressure from his investors and the broader financial community, but he was confident in his analysis and stuck to his guns. By 2007, as the housing bubble burst and the financial crisis unfolded, Burry's bet paid off handsomely. His fund made hundreds of millions of dollars, turning him into a legend almost overnight. His role in predicting the crisis was later chronicled in Michael Lewis's book, The Big Short, and the subsequent 2015 film adaptation, where Burry was portrayed by Christian Bale. Post-financial crisis and Scion's closure. Despite his success, the stress and strain of managing Scion Capital during the financial crisis took its toll on Burry. The pressure from skeptical investors who didn't understand his strategy had worn him down, and in 2008 he decided to close Scion Capital to focus on managing his own money. Burry had made his mark on the financial world, but the experience left him jaded about the complexities and politics of managing a hedge fund. After closing Scion, Burry took a hiatus from public life, turning his attention to personal investing and his family. He remained involved in the markets, but without the pressures of external investors. He had the freedom to pursue more niche investment opportunities. Burry's post-crisis investments, water, and more. After the financial crisis, Burry began to focus on longer-term macroeconomic trends. One of his most notable post-crisis investments was in water. He believed that water, as an essential and increasingly scarce resource, would become a valuable commodity in the future. But true to his contrarian nature, Burry didn't invest in traditional water companies. Instead, he bought farmland with access to water, reasoning that the most sustainable way to invest in water is through food production. Burry also warned of the dangers of quantitative easing and government bailouts following the financial crisis. He believed that the unprecedented levels of stimulus would lead to future economic instability, and he voiced concerns about inflation and the long-term consequences of loose monetary policies. The GameStop saga, another unconventional bet. In 2019, Burry found himself at the center of another financial storm, this time involving the video game retailer GameStop. Burry had taken a position in the struggling company, believing it was undervalued and that its stock price would eventually rise. What happened next was nothing short of chaotic. A group of retail traders on Reddit's Wall Street Bets forum began aggressively buying GameStop stock in early 2021, causing its price to skyrocket. The massive short squeeze caught Wall Street by surprise, leading to huge losses for hedge funds that had bet against the company. Although Burry had reduced his position in GameStop before the Reddit-fueled rally, his early investment in the company paid off handsomely, once again proving his contrarian instincts right. Lessons from Michael Burry's career. Throughout his career, Michael Burry has imparted several valuable lessons to investors. Thorough research is key. Burry's success is rooted in his meticulous approach to research. He doesn't just look at the surface. He digs deep into the numbers and builds a comprehensive understanding of the assets he invests in. Trust your convictions. Burry's ability to stand by his convictions, even when everyone else doubted him, is one of his defining traits. Whether it was his bet against the housing market or his investment in GameStop, Burry trusted his analysis and was willing to go against the grain. Be a contrarian. Burry's career is a testament to the power of contrarian thinking. Some of his biggest successes, including predicting the subprime crisis, came from recognizing opportunities others had overlooked. Patience pays off. Many of Burry's most successful investments required immense patience. He was willing to wait for years for his predictions to come true, even when the market and his investors were pushing him to change course. Don't follow the herd. Burry's career is a shining example of the dangers of groupthink. While others were piling into the housing market in the 2000s, Burry was one of the few who saw the cracks forming beneath the surface. Adapt and learn. While Burry initially pursued a career in medicine, he adapted and found success in a completely different field. His ability to learn, adapt, and apply his analytical skills to investing shows the importance of flexibility in any career. Conclusion: a legend in finance. Michael Burry's life is a fascinating blend of intellectual brilliance, personal resilience, and an unwavering commitment to his own principles. From his humble beginnings as a doctor to his rise as one of the most influential investors of his generation, Burry's story is a lesson in independent thinking and the importance of thorough research. Whether it's predicting the collapse of the housing market or making long-term investments in water, Burry has repeatedly proven that going against the crowd can lead to extraordinary success. Like and subscribe to Marty's Money for more fun and educational investment content.